Hi, this is Julius Montejo, and I'm here to share regarding Traideringer Settings. And for those who don't know me, I'm a registered financial planner here in the Philippines, and I've been using the software for quite a while already. I've been gaining some amazing results. That's why I'm sharing this to people. And in this session, I'm gonna also share a bit regarding forex basics, so that you will know the effects of the settings towards your trading account. So for those, I know some of you is not new to forex, so you could skip the first part and go on with the settings part. So forex basics. So when we trade in forex, we always trade by pairs. So for example, if you have euro, we pair it with another currency, because how would we know the value of euro if we won't pair it with another, right? So for example, euro, the most common pair that is being traded right now is what we call euro USD. So let's say euro paired with USD. Now the left symbol represents the base currency, the right symbol represents the quote currency. Now we are always referring, or we are all based from that symbol, we just want to know how much USD is there for 1 euro. How much euro if converted to USD. So if, let's say for example, the euro USD pair price right now is around 1.11445. So it just means that 1 euro is equivalent to 1.11445 USD. So the lowest movement in the forex market in terms of price is what we call the pip. So the pip is always referred as the fourth decimal place for pairs which has 4 decimal or higher, or for non-Japanese yen pairs. But for Japanese yen pairs, the pip is referred as the second decimal place for Japanese pairs, since the conversion for Japanese pairs is much more higher. So a pip is a standardized unit, and it is the smallest amount by which a currency code can change. So you might be confused why, if it is the lowest unit, why is it that some broker would quote until the fifth decimal place for these pairs, and only 3 decimal places for Japanese pairs. So the purpose of the brokers is only to have a more precise computation of the currency pair. So, but what you need to look at is only the pip, which is the fourth decimal place, and for Japanese yen, the second decimal place. So, in forex also, you need to know what is lot. Lot represents the size of your trades in forex. In another interpretation, lot is the number of currency units you will trade in forex. So, if you've heard a friend trading in forex and you're still not familiar with foreign exchange, I think you heard him like, I'm ordering 1 lot for this pair, or 0.05 lot for this pair. So basically, lot size is only the unit for your orders in the foreign exchange. So there are 4 types of lot size, but what I'm going to be sharing to you today is the standard lot, since we are using standard lot in trading using Traideringer. So one standard lot is equivalent to the volume of 100,000 units. So whenever you purchase 1 lot of a currency pair, you buy 100,000 units of the base currency, the first currency pair, the currency in a pair. So for instance, buying 1 lot of euro USD means you buy 100,000 euro. Another example is that you want to buy a currency pair, euro USD, at the exchange rate of 1.5. So 1 euro is equals to 1.5 USD. Then, when you buy 1 lot of this currency pair equal to 100,000 euro, you purchase 150,000 USD, or 100,000 times 1.5. So if you use leverage of 1:100, you pay only 1,500 USD. That's 150,000 divided by 100. That's 1,500 USD to open your position. That's the use of leverage. Leverage is basically to lower the amount of to lower the amount that you pay for a certain purchase. It basically jacks up your buying power. So leverage in Forex is the ratio of the trader's funds to the size of broker's credit. In other words, leverage is a borrowed capital to increase the potential returns. The Forex leverage size usually exceeds the investment capital for several times. Let's say, for example, if you have 1,000 USD with a leverage of 1:500, you are in control of 500,000 USD. That's 1,000 times 500. So the broker lends you 499,000 USD. That's why when we trade, the broker computes our margin. So we have what we call margin call. So the broker actually does not have any risk in terms of trading, even though the broker lends you some money. Why? When your margin becomes low and you get a margin call, he cuts the trades, closes the trades so that it won't touch the 499,000 USD that he lends you. So when you trade, the only one that will lose will be the 1,000 USD because of the margin. So remember, you don't have to compute how much margin you have, because MT4 or the MetaTrader 4 app would compute it for you. But always remember, don't let the margin level become lower than 150%, because the broker could give you a margin call because of that. Then amount per pip movement. So we've got also to know, we need also to know how much amount would it be per movement of price, or per pip movement. So but before that, let me discuss to you how we order in the foreign exchange. So when we put an order, when we put a buy, one lot, Euro USD, it just means that you're buying Euro, you are selling USD. So you want your Europe economy to go up and USD economy to go down. But if you sell Euro, it just means that you're selling Euro and you're buying USD. So you want your prediction is the European economy would go down and the USD economy would go up, or the Euro price would go down, USD price would go up. So always remember that if you buy the base currency, you're always selling the quote currency. When you sell the base currency, you're always buying the quote currency. So let's say if you buy one lot, Euro USD, the price per movement is 10 USD per pip. So if you have 1.11445, again, the pip is the fourth decimal place, which is 4. So let's say the price moves up to 1.11455. Then your account is at positive 10 USD. Now, if the price goes down by 1 pip, or 1.11435, your account is now at negative 10 USD. Now, I think you've heard about drawdowns, right? I think you have trade friends. If you have friends who trade in Forex, you've heard them talking about drawdown. Drawdown is actually the negative floating of your account. So if you ordered 1.11445, it's a buy, and the price started to go down at 1 pip, so 1.11435, you have negative 10 USD. That's what we call drawdown. Unless that order is being closed manually by you, or closed through the robot, it will still be a paper loss, or a floating amount, which we call drawdown. Now, it could go up or recover, or it could go down and and eat up all of your capital. That's drawdown. So amount per pip per movement. So for let's say instead of buying, you're selling one lot Euro USD for the movement is 10 USD per pip for Euro USD. So 1.11445, if it goes down and you're selling 1.1145, it got down by 1 pip. So your account is at positive 10 USD. But if it goes up 1.11455 by 1 pip, your account is also at negative 10 USD. So you are at drawdown of negative 10 USD. So always remember, when you're predicting the market for a certain pair to go up, buy. When you're predicting the market to go down for a certain pair, order a sell. So, but we don't need to predict those things because the robot would read the chart for us, Traideringer. But at least you know how much the price per pip movement. But it will vary depending on the currency pair. So for Euro USD, that's 10 USD. For USD JPY, that's 9.12. Euro JPY, that's 9.12 also. AUD USD, that's 10 USD. AUD JPY, that's 9.12. For Euro AUD, that's 6.89 USD. So what are the currencies that we pair? I mean, what are the currencies that we trade? I think I have discussed this in the previous orientation, or the initial orientation, but let me share this again to you. So the first ring is Euro USD, Euro JPY, and USD JPY. The second ring is more volatile. It's AUD USD, AUD JPY, and Euro AUD. So it is paired. The currencies are being set because, let's say, for the first ring, if one currency is on negative, or if two currencies is in negative, usually the other currency is in positive. That's how it works. That's why it's called the ring. So first ring and second ring. Now for some people, they choose not to trade the second ring because it is more volatile, the AUD pairs. Some people will only trade the first ring. But you could trade the second ring if you use lower lot size, which I will be discussing later. Then I think you already know the basics that we need to learn for you to be able to know the effect of the Traideringer settings. So let me give you a walkthrough of the settings. So we have the weekly goal. Weekly goal is the target percentage that you want to profit in a week. Now, weekly goal does not affect how the robot trades. It only limits how much trade it does in a week. So if you set it lower, like 3%, 5%, when the robot reach 5% or 3%, let's say if you set it by 3%. So when the robot reach 3% profit in a week, it stops trading. So the earlier you get out of the market per week, the more safer your account is. So it's better if you set the weekly goal to lower, especially if you are new to foreign exchange or to forex. But for me, I set it to 50. Why? Because I manually stop the bot from trading. But in order for you not to have much hassle in bot management, you could set the weekly goal to lower. Then equity protector. Equity protector, from the word itself, it protects your equity. So if you put like 20%, when the drawdown becomes negative 20%, so if you have 1,000 USD and you set the equity protector to 20%, so at negative 200 USD, it will cut the losses. So when the drawdown is being closed, it will directly deduct to your equity or to your balance. So the 1,000 USD minus 200 USD, that's 800 USD. That's what you call equity protector. Now, for I always advise to people to set it higher, like 80%, 100%, because um, in Forex, whatever goes up always goes down, whatever goes down always goes up. So we just don't know when it will go down again, when it will go up again. All we need to do is to set the orders of the robot lower so that for certain swings in the market, we won't get a margin call. So it is better to put the equity protector to higher, like 80%, 100% for me, but you could set it, if you're really conservative, you could set it to 20%, but usually if you set it to 20%, it could hit your equity protector, especially on big spikes. So range between levels. So range between levels is the number of pips. Sorry, there's still starting lot size. So starting lot size is the first order that the robot would order. So for example, if you set it to 0.06, then the first order would be 0.06. Then the range between levels is the number of pips before it orders another one when it is in drawdown, or it orders another buy or sell. So for example, if you're buying 0.06, you're buying 0.06 and you have a drawdown of 25 pips. So after on the 25th pip, it will order another one, a much higher lot size than the starting lot size 0.06. So moving average period, we have moving average period, don't touch it. It is company default 20. Trade on 4-digit brokers. So some brokers have only 4 digits. So you could set it to yes if they are trading on 4-digit. Then range multiplier. Range multiplier is after the first order. I mean after the second order. So if you order buy 0.06, if the robot order buy 0.06 Euro USD, then it is having a drawdown on 25 pips. It ordered a second order to average the first order. The range multiplier multiplies the set range level. Let's say for this example, the range between level is 25. So, and our range multiplier is 1.15. So we just multiply 25 by let me multiply it. 25 by 1.15. So that's 29. So meaning the third order would be 29 pips from the second order. That's range multiplier. The position size multiplier, every time the robot is in drawdown and it reaches a certain range between levels, computed also through the range multiplier, it multiplies the lot size, the previous lot size, in order for it to cost average. So if you are starting with a 0.06 and you have a drawdown of 25 pips, then the next order would be 0.06 times 1.4. The next order would be 0.08. So that's how position size multiplier works. But I'm gonna be sharing more regarding that because those multipliers are really important. So I'm gonna be sharing more so that you will understand. Then stop trading for news. You set it to yes. When to stop before news, when to start after news. The robot will stop trading before news, depending on the time that you set. For me, I set it to 15 minutes. So 15 minutes before the news, it will stop trading. And 15 minutes after the news, it will start trading also. So this is how intelligent our artificial intelligence is, or AI is. It reads a data in Forex Factory. It reads all the scheduled news, all the high impact news, and when it sees a high impact news, it stops trading. So let me show you a bit on how it looks like. So so if you look at forexfactory.com, you could at the forexfactory.com you could go to the calendar side, and here you could see some high impact news. How to filter, you just tick the red and gray folder, then you apply filters, you choose the currency that you want to look at, then you could see high impact news. Now the robot does not lose if it is in normal market condition. It loses usually on high spikes like news. So we need to stop the robot from trading 15 minutes before the news or 30 minutes before the news and start trading after the news. So it's really a good feature, because before, when I was using other expert advisors, I usually manually stop the robot from trading. But because of Traideringer right now, it's more easier for me, because it just detects news and stops for itself. Then we could also we have also wait 2 hours after market open. If we set it to yes, the robot would trade 2 hours after the market will open during Monday at 5:30 a.m. in the morning, when the Australian market will open. That's PH time, 5:30 a.m. PH time. So we could set when the robot would trade on Sunday, from Sunday to Saturday. It's actually 24 hours times 5. That's only 5 days. But the reason why you get Sunday to Saturday at the settings, because of the overlapping of time between countries. So in the Philippines, 5:30 a.m. Australia will open 3 p.m. EU will open 8 p.m. in the evening. US will open. So that's basically why there's an option for you to trade on Sunday and Saturday. So we usually trade from Sunday to Thursday. We don't trade on Friday, because we don't want trades to carry on the weekends, because there might be some news that would make our drawdowns much bigger on Monday. But for some people like me, I choose to trade on Friday, but I set the settings really low, so that even though there are some news that affects my trades on Saturday and Sunday, it won't affect greatly my account. So, but for accounts like 1K USD, I suggest you just trade from Sunday to Thursday. My account is now around almost 25K, so I have an option to trade on Friday. So I'll give you more discussion regarding starting lot size, range between levels, range multiplier, and position size multiplier. So for example, we have a starting lot size of 0.01 for a 1K USD account. Let's say our range between levels is 25. Our range multiplier is 1.15. And our position size multiplier is 1.4. And our max level is 5, let's say. So if you buy 0.01 Euro USD at a price of 1.11445, and the TP is 30 pips, around 30 pips, usually the bot would set it around 30 pips higher than your current price. So if you're buying Euro USD, and the first order, usually it won't give you positive results. It will give you a drawdown. And when the drawdown, usually, let's say the price during the time dropped around 25 pips. So when the price drops 25 pips from the current price, so that's 44 minus 25, the robot will order another lot which is higher than the first one. So that's the use of the position size multiplier. So since the level range we set to 25, so it will order another order when the current price drops by 25 pips. So the position size multiplier is 1.4. So that's 0.01 times 1.4 is equal to 0.02. So the next order will be buy 0.02 Euro USD at a price of 1.1195. That's 25 pips lower than the previous one. So during this time, you have a drawdown of 25 pips. Now, why does the robot do this? It's because it cost averages the orders. Because we know the market will always go up whenever it goes down, but we don't know at what price it will go up. So it could go down and recover just a few pips up, and it won't reach our take profit of 1.11745. Take profit, by the way, is that when the price reaches this number or this price, and the current price reach that price, it will the order will automatically close and it will add up to your balance. So for this example, since we cost average, the robot would change the take profit from 1.11745 to 1.11315. So instead of going to the previous take profit, instead of letting the price hit that TP, you will have a lower take profit. So the robot, your account could get out of the trades much faster. So for this example, the buy 0.02 would be positive and the buy 0.01 would be negative. If you add it up, the profit would still be positive. So if still even if the robot puts a buy 0.02 but still the market still goes down, then this is where the range multiplier would be relevant. So if your level range or range between levels is 25 pips, so the moment it drawdowns on the third order, it will be multiplied by the range multiplier. So 25 times 1.15, that's 29 pips. So the more it will be in drawdown, the higher would be the distance between trades, which is much safer, because at times that we are in drawdown, we don't want a lot of trades in between. Then position size multiplier, 0.02 times 1.4, that's 0.03 rounded off. So so here it's gonna buy 0.03, 29 pips lower than the previous price. So that's 1.1095, or that's 119 minus 29 pips. So that's how you compute it. And the TP, take profit, instead of at 1.11315, it will also be a bit lower, or 1.1185, or a bit or in between. So the robot automatically computes the take profit. You don't need to compute it. But usually what happens is that the last trade is in positive, and the last trade or the second trade is in positive, and the first trade is in negative. So if you sum it up, always the trade is in positive. So the robot has also some losses, but it compensates the losses through cost averaging. And for this one, since we set the max level to 5, it will only trade up to 5 orders. So this is already 1, 2, and 3. And if it keeps going down, now it multiplies 29 pips, the range level, the range multiplier, 29 pips times 1.15, and so on and so forth. So it compounds also the number of pips per trade. So it's much safer, because usually when the trend reverses, it would swing like 100 pips, and when there is a spike, it will swing like 200 pips. So um, using this using range multiplier, it lessens the risk. So I hope you understand the use of range multiplier, position size multiplier, and range between levels. So amazing strategy. The robot actually also has what we call the trail stop strategy. So if you are buying 0.01 euro USD at 1.114445 and you have a take profit of 1.11745 and you have a stop loss is basically to stop the losses when it drops to a certain negative pip or negative amount. It stops the losses from there. So for this example, our stop loss is 200 pips from the current price. So when it reaches that price, it will cut the losses. It will automatically deduct to your account. So let's say you're buying 0.01 at 1.11445. So when the price goes up, let's say by 30 pips, 1.11595. So you already have a positive floating in your account, right? So I think that's around positive 30 cents. I mean that's 30 pips, so that's around positive. I think that's 59. Wait, this is not 30 pips. 59 times 44. 59. Sorry, this is 15 pips. So from 1.11445, the current price goes up to 15 pips or 1.11595. So when the price reaches this, usually the robot change the stop loss higher than your order and lower than the current price. So the stop loss would be moved from 1.09745 to 1.11505, so that if the price won't reach your take profit of 1.11745, well, if it reached the take profit, it would give you positive 3 USD. But when the price drops and it hits your stop loss, you still get positive 60 cents because you trailed the stop loss. Meaning, when the price current price goes down, it is the stop loss is set that the order will close still with a positive profit. That's how trail stop works. So if you are a manual trader, you usually manually trail stop. But using the robot would just move the stop loss for you, so that you have a sure profit when your trades are on positive already. So I think that's all for the settings, and I hope you learned something regarding the settings and the bot strategy. And for the recommended settings, here are my recommended settings. For daily chart, we have super conservative. Starting lot size is 0.01 per 2k USD for one ring, or 0.01 per 4k USD for two rings. And the range between level is 25. Max number of levels is 5. Range multiplier is 1.15. Position size multiplier is 1.35 or 1.4. You set the stop trading for news to yes, 15 minutes or 30 minutes before and after. The max number of levels, we are limiting it to 5 because there are some times that we are asleep and the market spikes so fast that we can control the orders of the robot, and we don't want the bot to order a lot of orders in between, especially when the market spikes. So we set it we set it to 5, and then when it reaches 5 orders, then we change the max level and we adjust the multiplier so that our account would have much lower drawdown rather than the current settings. So yeah, just set it to max number level of 5. I'm gonna be sharing more regarding that in my next video, which is drawdown management. Then for conservative settings, starting lot size is 0.01 per 1k USD for 1 ring, or 0.01 for 2k USD for 2 rings. And you could and the range level, the settings below are still the same. Then for moderate, starting lot size is 0.02 per 1k USD for 1 ring, or 0.01 per 1k USD for 2 rings for moderate settings. And below settings would still be the same. For aggressive settings, the starting lot size is 0.03 per 1k USD for 1 ring, or 0.02 per 1k USD for 2 rings. Now the settings, let's say the settings below would still be the same. By the way, what I mean by 0.0, let's say for this example 0.01 for 2k USD, it means that for every 2000 USD, one pair, let's say Euro USD, you set the starting lot size to 0.01 if you're using super conservative settings. But if you're using aggressive settings, set the lot size to 0.03 for a 1k USD account, and set the other settings to this one. Now for aggressive settings, you could also make the position size multiplier higher by 1.5, but it's really very risky. So I would suggest just set it to 1.35 or 1.4. Then for 4 hours chart, because in Forex you could actually let the robot analyze the daily price movement or the 4 hours price movement. The daily price movement, the robot would analyze trends much precisely because we are looking at a higher vision, which is daily price movement. But for 4 hours chart, the robot looks at the price movement per 4 hours. Now 4 hours is fine. I mean, for me it is much better than daily, but you need to set the lot sizes much lower than the daily chart. So for 4 hours chart, conservative would be starting lot size is 0.01 per 2k USD for 1 ring, or 0.01 per 4k USD for 2 rings. The range level would be the same like the daily chart, the below settings. Then for moderate settings, 0.01 per 1k USD for 1 ring. That's the moderate settings. Then range level would be the same with the daily chart. Then for aggressive, that's 0.01 per 1k USD for 2 rings. The settings below are still the same. For very aggressive, your starting lot size would be 0.02 per 1k USD for 2 rings. So this is very I don't advise this one. So it's really up to you what settings you choose. I have included settings at the description part so that you will be guided. But I suggest you use conservative or super conservative settings and let the profit compound. Always remember that this is not a quick rich scheme trading or company. We are here for the long term. So be conservative, protect your capital, and let it compound. So for those who are not familiar with compound interest, Compound interest is interest earning from the previous interest. Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. By Albert Einstein. So even Albert Einstein, a genius, understands how money would work for you and how money would work against you. So for example, if you have 100 PHP compounded monthly by 1%, in 3 months, how much would that be? So the first month, you have 100, let's say 100 pesos, earning an interest of 1% or 1 peso. So first month, you have 101 pesos. The second month, the previous earning would be included already with the principal amount or with the capital. So that's 101 times 1% or 101%, that's 102.01. And so on the third month, you have 102.01 times 1% or 101%, you have 103.03. So if it is simple interest, you only get 3 pesos from 100 USD, but since it is compounded, that's 103.03. Now, what is the effect of this to our trading? Let me show you a 1K USD at a 10% per month if compounded in 2 years. So, $1,000 at 10% per month in 24 months, it would become 9,489.73 USD in 2 years' time. Now, the question is, that's 2 years' time, right? So, now the question is, I am paying 169 USD per month. Does it compensate? The first few months, no, if you're only targeting 10% per month, and if you're using super conservative settings or conservative settings. But if you total the amount, if you total it, the total money that you spend on the robot rental is only 169 USD times 23 months plus 247 is only 4,134 USD. So that's 134 USD. So 400. Sorry, that's 4,134 USD. So 9,849.73 is the total amount you will get after 2 years. So if you deduct the cost of the robot, that's 4,134. You still get 5,715.73 USD. You deduct the 1,000 USD, you still profit 4,715.73. You divide it by 1,000 in order to get how much you've gained. You gained in 2 years 471%, despite just earning 10% per month. So that's how compound interest would work. Now, don't sacrifice large income, don't sacrifice your capital for large income per month, because the more you make the settings aggressive, the more your 1K USD will be risky, and it could actually wipe out your whole account. So let me give you a more computation. So for 1K USD, let's say in 36 months at only 10% per month, it could give you around 30,912 USD in 3 years time. So that's how big compounding is. So for some people with only 1K USD, especially in the Philippines, I know some could only afford the minimum equity. Some, I would tell them to think of the monthly rental as savings and just compound the earnings per month. But if you really want to have more profit, then it's better for you to refer three people. Refer three people to trade and use Traideringer. So if you refer three people, you get the software for free. So that's the best option actually, because when you have three people already trading under you, you don't mind how much income you get or profit you get per month. Even if you get 5% per month, it's okay because you're not paying for the 169 USD per month robot rental. So my advice is trade for a few months or even trade for a few weeks, then refer some people to trade using Traideringer. Then let me give you an idea also. My current account right now is already 25,000 USD, almost 25,000 USD. Let me show you the power of compound interest to my account. So that's 25,000 USD at 10%. I'm already only targeting 10% a month. I'm really contented even if it gives me around 8% per month. But I'm averaging 10% per month. So look at my account in 5 years time, 60 months. My account would be 7,612,040 USD. If you convert it to peso, that's 380 million in Philippine peso. So currently, I'm not withdrawing anything from this account. I'm letting it compound, and I hope you will still continue subscribing to the software so that in the future you can see my account grow and I could see also your account grow. Just always remember to trade conservatively, and just think of the compounding effect that it would make your account much bigger rather than the current profit that you will get. The technique actually, even in other finances or other investment instruments, even not in forex, the technique is discipline. You've got to have discipline per month, not to trade and to add more savings to your account. I mean, not to trade aggressively and to add more savings to your account. I always tell people, especially for people who wants my advice in savings and in forex trading, the technique is delayed gratification. You delay gratification, think about the future effect of money, future effect of compounding, instead of the things that you could buy now using the money. Because later on, if you have like 380 million in peso or 7,612,000 in US dollar, I think you'd buy more rather than using the amount right now. So the effect of compounding is really great, and it could really make us wealthy as long as we have discipline. The problem with most people is not having this discipline and thinking more about the future things the present things that their money could buy. So I think that's it. My advice is really super conservative settings, and refer three people in order for you to get the software for free. The next topic, a lot of people would ping me, especially, or message me, especially if there are some market spikes. Some they panic and don't know what to do, especially on large drawdown. So the next topic would be drawdown management, so that you will be able to know what to do whenever you have large drawdowns. So I think that's all that I could share today, and I hope you learned something from my video. Share it with people you know who is using Traideringer. Look at my suggested settings on the description part of this video, and please subscribe to my channel so that you'll be updated on the next tutorials or the next topics that I'm going to be sharing regarding forex. So thank you guys, and have a good day.